Good day, everyone. And for this weekend's episode of Growing Your Tree of Prosperity, I'm going to address something that is a pet peeve for a lot of trainers in the investment training industry. And some of my students, when they sign up for my program, they would often invite a colleague to join them by signing up as well. And in many cases, these colleagues would often be dismissive. And one of the things that I hear over and over again is this idea that, don't talk out, lah. Just tell me what stocks to buy. Okay. So I think a lot of people would imagine that investment trainers, financial influencers, or gurus have a magical list of stocks that, when shared and invested in, would turn ordinary people into millionaires or multimillionaires. And as such, there is a group, in fact, I would say that majority of Singaporeans are unwilling to invest the time, the money, and the effort into picking up some crucial financial skills. All right. Now, this presentation is going to be a little bit unique. It's not financial advice. It details my strategies when I get cornered in a social situation. So, for example, you're in a cocktail party and somebody just comes up to you and asks for stock tips, right? And as a investment trainer or someone who wants to become a financial influencer, what kind of answers can we give that wouldn't make us seem very aloof or dismissive or make us seem arrogant, right? So I hope that you will take this in the right spirit and treat this as an education on social skills and not a video that actually talks about what stocks to actually buy. All right. So whatever I'm saying is not an actual buy or sell recommendation. It's just a way to intelligently deflect questions. If people were to ask you, what stocks to buy in the local stock markets. All right. So let's dive right in. Okay, it's a very interesting way of looking at the video. So there are normally three stocks that I keep in reserve that is used for cocktail parties, right? All three stocks are in my portfolio. They are obviously not the largest concentration of funds, but I would say that they have a decent concentration, right? Given that they are such safe instruments. And so the first stock that I like to talk about is DBS, and this is Singapore's largest bank. And the reason why it's safe to share with people that you own DBS is because, generally speaking, at this point of time, it's doing well. All right, highest projected ROE or return on earnings across the three banks. It also has the highest dividend yield. It does well when interest rates go up, and when interest rates go down, these banks would normally try to rely on other sources of income like wealth management fees. So relatively safe investment for retail investors, right? And I think a lot of people listening to me have been enjoying dividends from DBS for a very long time. Okay, so wonderful for cocktail parties, not likely to sound stupid or make a lot of mistakes, right? Very safe choice. Okay, so that's for the banks, right? Another stock that I have on reserve for conversational purposes is Fraser Centrepoint Trust. And this is a REIT that specializes in suburban malls. If you own Causeway Point, you can visually observe the footfall in Causeway Point. Okay, and it's done very well during the pandemic, so very robust, right? And among the blue chip REITs, that means the REITs in the STI, Fraser Centrepoint Trust has the lowest volatility. It often has to compete against Mapletree Industrial Trust, but often it comes out ahead. All right, so it's one of the stocks that don't move a lot. Okay, but there are obviously some risks if you are a landlord. There is always this fear that cinemas, especially cinemas like Cathay Cinemas, they might be shutting down, or because Causeway Point is so close to JB, people would prefer actually going to JB to do some retail. All right, so that's the second stock that I keep in reserve. So people were to ask me, don't talk cock, just tell me what stocks to buy. And I'm forced to do that because maybe that person's a relative, all right? So DBS, Fraser Centrepoint Trust. And on top of all that, I keep a third business trust in reserve. This is Netlink NBN Trust. This is a business trust that operates, builds, and maintains fiber networks in Singapore. Okay, and so that's a very, very boring business that lacks drama because you're laying out cables and you're getting paid, right, to maintain and operate these cables. Okay, there is some risk from higher interest rates and prices set by the regulators, but this is also another one of the safe investments that retail investors have been familiar with for a very long time. Okay, so this basically is it, right? If you were to ask me, corner me, find me in the MRT and says, "Hey Chris, what stock should I buy?" I'm too polite to tell you the 60 stocks that I own or how carefully balanced the early retirement masterclass. We build portfolio sizes of 15 to 20 so that they are more well diversified and how well balanced they are. This is the kind of portfolio that when I'm cornered, I would talk about. All right. Yeah. Now, there is actually a little bit of data science behind picking these three components, right? And it'll be very useful if you're just willing to put in some effort into learning about finance. Okay, so as it turns out, the biggest weakness about a three stock portfolio like this is that it lacks diversification, right? But I've carefully chosen them such that they are the business of lending money, renting property, and managing fiber. So they're relatively different from each other. And if you know a little bit of data science and you attend some investment training, all right, then you'll be able to understand this thing called Pearson correlation heat map that I've generated with my Python programs. And you find that for banks, business trusts, and Fraser Centerpoint Trust, I'm putting the ticker symbols here. Okay, so the uppermost row is Netlink Trust, the middle row is DBS, and the bottom row is Fraser Centerpoint. And you look at the numbers in the matrix, right? The correlation between each of these different counters doesn't exceed 0.3, right? Which means that they don't actually really go up and down together at the same time, right? And in fact, the correlation sometimes it's even lower than the correlation between US stocks and bonds in some market regimes. All right, so if anybody were to criticize these three triplet of stocks as lacking in diversification, this is probably the best counter argument that you have. All right, and if you actually look at the returns that combine these three investments in equal shares, you find that the returns actually have been very good, right? Recently, for the past 10 years, it has doubled the returns compared to the STI ETF, so at 10.6%, right, compared to 5.1%. And it does so at a similar risk, all right? It does so with an annual standard deviation about 13, all right? But it's got a fantastic Sharpe ratio of 0.8, right, which is a very, very good set of stocks to choose from. Okay, and it's also safer. The worst case scenario is that your maximum drawdown is about less than 31%, but for the STI ETF, it's actually higher at about 34%. Okay, yeah, so objectively, this selection can be justified. And finally, for many of these retail investors that say, show me the money, all three of these stocks, based on my Python program, have a current yield higher than 5%. All right, so it's really one of those combinations that in fact, I have done so. I've parked a decent amount of money into these three stocks along with others, right? So that you'll be able to get a nice yield above 5% and continue in your journey towards financial independence. Okay, and so that's all for my presentation. Okay, this is what I would do to deflect questions if I'm cornered and people ask me, don't talk cock lah, tell me what stocks to buy lah, you think you're so smart lah, you are guru lah, So this is the kind of answer you will get, all right, straightforward answer. Do note that a stock tip is not a replacement for a good financial education, and my favorite list of 3 stocks can and will change over time. In fact, I'm constantly looking at the volatility between Fraser Centerpoint and Mapletree Industrial Trust, and I will swap one or the other in, right, for the REITs component, right, and I always pick something with very low volatility. Okay, And also clearly, if you look at the way I look at investment problems, right, having a qualitative understanding of the business is generally not enough. I'm not a believer in stories. I don't believe that just because somebody says that, I look at the management and I find that the management is very trustworthy. They brought me down to tour their factories. Do you know that this person is a third generation kind of founder? Well, I don't care. All right. I'm a quant. Uh, I let my Python programs and I let my software tools make decisions for me. All right. So normally I do balance qualitative with a quantitative approach towards finance. All right. And basically, the process of sifting out stocks to build a diversified portfolio does require a strong foundation in finance. As I've demonstrated in this short video, your appreciation of what I talk about would be a lot better if you understood concepts like risk, returns, correlations, and Sharpe ratios. And you actually look at the slides that I show you, I follow a lot of other ratios, right? A lot of other numbers, okay? Like this thing called skew or kurtosis, right? All these numbers actually mean a lot to me, right? So don't hesitate to look for me if you want to figure out how to develop some hardcore financial skills, right? Although that might mean learning how programs process numbers and how computers actually calculate this data. For those who want to know how to help me, if you like my content, please subscribe to my channel. That's the best way to help me for now, without paying for anything. If you actually want this to continue, you want to keep it sponsor free, at least sponsorship from financial institutions, you can buy me a coffee by following this link, right? Or if you want to listen a little bit to my life story and figure out how the financial independence and retire early works, then sign up for my course review under Dr. Wealth. Alternatively, just Google ERM intro, take the first link. All right, and I hope to see you in my next video. Thank you very much.